Monk, there's a word economists are suddenly using again after many years: stagflation. And that reason is the Iran Israel conflict. Apparently, this war could trigger something very dangerous for the global economy. But I don't fully understand this. What exactly is stagflation, and why are investors suddenly worried about it again? That is a very important question because stagflation is one of the most difficult economic situations for markets and government. In simple terms, stagflation happens when inflation rises, economic growth slows down, and unemployment increases. Normally, economies face either inflation or slowdown, but stagflation is when both happen at the same time. In this video, we will understand why economists are warning about stagflation again, how the Iran Israel conflict and oil prices are connected to the risk, and why investors across the world are paying very close attention to it. To understand the concern, we first need to understand the concept. The word stagflation usually combines two ideas: stagnation and inflation. Stagnation means the economy stops growing, inflation means prices continue rising. Normally, central banks can solve one problem or the other, but when both occur together, policymakers face a very difficult situation. And this is why economists fear stagflation so much. One of the biggest historical triggers of stagflation has been oil shocks. When oil prices surge suddenly, transportation becomes expensive, production costs rises, and inflation increases across the economy. But at the same time, higher costs slow down the economic activity. And this is where the Iran Israel conflict becomes important. The Middle East plays a central role in the global oil supply. Whenever geopolitical tensions rise in that region, traders immediately fear supply disruption. That fear alone can push the oil prices very high. And when oil prices spike, inflation risk increases globally. But inflation is only one part of the problem. Higher oil prices act like a tax on the global economy. Consumers spend more on fuel, companies face higher operating costs, economic growth begins to slow down. So, economies may experience rising prices and slowing growth at the same time. And that combination is exactly what defines stagflation. For investors, stagflation creates a challenging environment because during stagflation, stocks may struggle, bond markets can become volatile, inflation erodes the purchasing power. This is why investors pay close attention to energy markets and geopolitical events. So, when economists talk about the risk of stagflation returning, they are essentially warning that energy shocks could create a difficult environment for the global economy. If you want to understand how global events like war, oil prices, and inflation influence the market, subscribe to the channel because we break down the macro forces that shape the global economy.